Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. If you are new here, then you might want to subscribe to this channel because we cover a lot of insightful information from trading strategies to trading indicators to expert advisors to reviews of Forex related platforms and basically a whole lot of information that pertains to trading, okay, which you can use to enhance your trading career, your trading journey. Now, without further ado, we're going to be going straight into what we have for this video. And in this video, we're going to be discussing the stochastic Dinapoli indicator or the Dinapoli stochastic indicator. All right. So the Dinapoli stochastic indicator, as we can see, this is how the indicator looks like. It's quite different from the standard stochastic oscillator. All right. This is a custom indicator, so if you want to make use of this indicator, you might have to download it from a reputable source online. I downloaded this indicator and then I added it to the chart. So you would have to download it as well if you want to make use of it. And then you add it to your chart, you add it to your indicators folder, all right? And after doing that, you would have to exit the terminal and then reopen the terminal. That is if you were already in the if your terminal was already open before, okay, before you added the indicator to the folder, right? So after doing that, then you can just go to insert, go to indicators, and then you click on the Dinapoli stochastic indicator, and then here you have it on the chart. Now we can see that this indicator uses similar reaction to the standard stochastic oscillator. The indicator navigates between 0 and 100, and it's also a momentum oscillator. It tells us when an asset is overbought and when an asset is oversold. All right, and then it has the middle point, which is 50. When the price is above the 80 level, it shows us an overbought condition. When the price is below the 20 level, it shows us an oversold condition. However, when we have the price below 50 but above 20, it can show that the bearish trend is still ongoing. If we have the price, the indicator, when we have the indicator above 50 but below 80, it can show that the bullish trend is still ongoing. All right, so let us just look at the settings for this indicator very quickly. All right, so we can see that it has the fast K. The value for the fast K is 8, the value for the slow K is 3, and the value for the slow D is 3. So we can use these default settings for our indicator. All right, for the strategy, the levels of 20, 80, and 50, we can use the default settings basically for this strategy. All right, so all you just need to look out for are the crossovers either in the overbought zone or in the oversold zone, right? So I would also recommend that you use this indicator in the direction of the trend. All right, if you are trading a trending market, then use the indicator in the direction of the trend. Okay, so now this is a bullish trend. This is an obvious bullish trend because we are having a series of higher highs and higher lows, right? So if we want to look for an opportunity, we're going to be looking for a buy opportunity, right? So remember what I said: when you have the stochastic give you a crossover signal, okay, that is a buy signal, right? When you have a bullish crossover signal, meaning when this line, the lighter blue line, cross over the darker blue line, you have a buy signal, right? So if you get the buy signal between 50 and 20, you can go ahead. It does not necessarily need to be in the oversold territory. All right, so whether the signal comes in the oversold territory or between 50 and 20, you can go ahead and enter a buy. All right, and make sure you use trend lines, make sure you use support and resistance levels just to add to your confirmation. All right, because no single indicator is foolproof. All right, so there is no indicator that guarantees profit. So this indicator is not an exception. All right, so it's important that you confirm the signals given to you by this indicator. You can use other indicators as well. You can actually use moving averages or even the standard stochastic oscillator or any other indicator of your choice to confirm the signals given to you by this stochastic Dinapoli. All right, so now in this situation, we had a bullish crossover, and that was a buy signal, right? So we would have considered entering a buy trade somewhere around here, and around that same point, the price was bouncing off this support, right? So we would have set our stop loss right below this support level, and then our take profit could have been either at the nearest resistance level, or we can wait for the price or the indicator to get into the overbought territory and begin to cross downward. That would have been a signal to exit our buy trade. All right. So another way to exit is using other indicators as well. You can actually use any other indicator of your choice to confirm your exit signals. All right. Then as for a sell trade, we can see that when we had this crossover around the overbought territory, we can see that the price was also bouncing up a resistance point around the same time, right? And then after we had the indicator cross below the 80 level, we can see that we had the price of gold drop below this support level, and at the same time it also broke the dynamic support. Those were extra confirmations. All right, so we had a confirmation from the horizontal support. At the same time, we also had a confirmation from the trend line. Okay, so that is a great confluence. All right, so remember that confluence shows when you have a signal from different indicators at the same time, right? So when you have more than one indicator telling you the same thing, it's a sign that that move might actually be strong. And I just added the moving average to the chart right now, and we can see that even the moving average was giving a sell signal about the same time. Okay, so this would have been a great place to enter a sell, especially after it retested the newly formed resistance. Okay, it was formerly a support that turned into a resistance. All right, so after entering the sell, would have considered setting our stop loss. If you want a tight stop loss right above that breakout point, or if you want a wider stop loss, you can use this previous swing high, and then you can target your nearest support level for your take profit, or you can just wait for the indicator, the stochastic Dinapoli, to enter into the oversold territory and begin to point back upwards to confirm your exit. Okay, you can use that to exit your sell trade when you have the crossovers happening around the oversold territory. That is the bullish crossover in this case. All right, so now basically this is how the indicator works, and this is how to use the indicator to execute your trades. All right, so briefly, we're just going to be talking about risk management. Okay, it's very important to practice proper risk management when using this strategy. Okay, irrespective of the strategy you are using, actually you need to observe proper risk management, and proper risk management entails the lot size you are using, the leverage you are using, and all of that. So basically, you would want to always calculate your lot size in such a way that you won't be risking more than 2% of your account per trade. All right, so if you are trading a $10,000 account, for example, 10% of $10,000 is $1,000, right? And then 1% of $1,000 is $100, right? So in a trade, if you're using a $10,000 account, for example, in a trade, you would want to be risking a maximum of $200 in one trade. If you are using $1,000, for example, as your capital, it means that you would want to be risking a maximum of $20 in one trade, which is 2% of $1,000, right? Because 10% of 1,000 is 100, and 1% of 1,000 is 10, right? So 2% is going to be $20. So you want to risk a maximum of $20 in one trade. All right. So basically, you will use the same calculation for any trading capital that you are using. So that is what we call risk management, making sure that you do not risk more than you can afford to lose, and giving room for possible losses, because losses are part of the game, right? So if you end up risking all your account at once, what if at that time you lost the trade? You end up blowing your account. But because losses are part of the game, it's important that you give room for losses. Okay, that's the reason why you should be risking only a small percent, so that when you lose, you only lose small, and then when you win more than you lost. And that's the reason why we talk about risk to reward ratio, and I recommend a risk to reward ratio of 1 to 2. So when you are risking $10, for example, your minimum potential profit should be $20. All right. So if you're risking $10 to make $20, that's a risk to reward of 1 to 2. Okay. So basically, that is how it works, right? So that is it for this strategy. This is it for this indicator, the stochastic Dinapoli. It functions similarly to the standard stochastic oscillator. Just watch out for signals from the oversold territory and the overbought territory. Watch out for crossovers, bearish crossover, and bullish crossover. All right, and make sure you always confirm your signals by using other indicators, by using chart patterns, by using candlestick patterns, by using support and resistance levels. All right, including your trend lines, obviously. Okay, so that is it for this video, guys. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to share this video to those who you feel also are going to find this video insightful. Until next time, stay smart and trade profitably. All right, see you next time.